Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and I'm glad to be joined by Yoni Assia, founder and CEO of eToro. Yoni, thanks so much for joining us.
Thank you for having me. Always a pleasure.
Well, first off, before we begin, I want to congratulate you on making Fortune's top 40 under 40 list of 2020. That's an amazing achievement. But for those viewers who might not know you, you want to give a little background of kind of who you are and how you got into blockchain?
Sure. So I'm Yoni Assia. I'm the CEO and founder of eToro, which is the world's largest social trading network, where we have 15 million registered users who can trade stocks, commodities, currencies alongside cryptocurrencies within a social network where everyone can see, follow, and automatically copy the top traders from all around the world. And we've been relatively very early on into Bitcoin. So we started actually trading Bitcoin in 2011. Very luckily bought some Bitcoins for $5 for the company. So when Bitcoin started going up, we actually launched Bitcoin trading back in 2014. We were, I think, the first regulated online European broker offering Bitcoin trading. Then it wasn't that popular for a couple of years, and then when 2017 came along, we were one of the very few fiat on-ramps that took basically people coming in to buy Bitcoin later than Ethereum and XRP, all the way from $1,000 to $20,000, or ETH from $8 to $1,400. And we really saw, both eToro sort of customers skyrocket as the crypto rally was very intense back then.
Mm-hmm. And that kind of has been, a long time ago, a couple of years at this point of kind of the boom, and the market has gone down, has gone up, and right now we're a little bit above 10K at Bitcoin right now. But that's not the buzz. The buzz right now is DeFi. That seems to be, the hot thing right now in crypto. And I wanted to get your take on DeFi. First, let's look at it, purely as a retail, exchange like yourself. Has there been interest from the clientele for DeFi tokens on the eToro platform?
I think it's been relatively still niche. So, we've been, the more the crypto zealots within eToro have been exploring it. Our blockchain labs team have been looking at what's happening, as well as our own DeFi project, the GoodDollar, which is our social impact project. So we're definitely keeping our eyes very close to DeFi, but I think generally this is still viewed as something relatively sort of niche within the sort of core Ethereum developers and ecosystem. I do think it has huge potential. I think it's extremely interesting what's happening in that space, but eToro has always positioned itself more as a mass consumer, people who want to sort of really manage their wealth. I think DeFi is not there yet. It's on the path to get there, but that's sort of our current view. So we're keeping our eyes on it, but we haven't really sort of pushed the envelope with it yet.
Mm-hmm. And that seems to be kind of a big problem with DeFi. I mean, some would consider a big problem with DeFi is high barrier for entry. It's a lot of yield farming, liquidity mining. They're very complex tools, and but that's kind of how eToro became so successful in the traditional market, was that it allowed copy trading. It allowed people who didn't necessarily have the real intense financial and stock market knowledge to be tracking it 24/7, to be day trading. And instead, they could copy a professional trader or someone they knew was smarter. Are you considering doing something in the DeFi space where you could copy a DeFi trader, copy a DeFi yield farmer, and kind of give them your tokens and copy there?
So we're doing two things. One, as you mentioned, simplicity has always sort of been a core value of eToro, and DeFi is still very much on the complex side of things where people really need to understand what they're doing, how to use smart contracts, etc. Although, again, some applications have been simplifying it, but again, simplifying it for sort of the Ethereum user who knows how to use MetaMask Web3, etc. So our first sort of dive into DeFi is relatively sort of straightforward with staking. We are looking at staking and how we can offer staking to our users on the existing crypto assets on the eToro platform. And I think staking is a form of DeFi, as it rewards basically the incentives of the network to the holders of the cryptocurrencies. I think the other part where we're definitely looking into this is through the GoodDollar. And again, our view was, how do we simplify a sort of yield farming, but how do we simplify the entire concept of digital currencies to people who can participate in that process, and how can we do something within digital currencies that's really for good. So that project is really about creating a universal basic income on the blockchain. It was just launched last week. It already has almost 30,000 people who downloaded the wallet. And again, really simplicity in its core. You just basically register and you start claiming GoodDollars every day. And then you can start using those GoodDollars. You can send and receive those GoodDollars to everybody who has a GoodDollar wallet. So really try to simplify to the core how people can get digital currencies. And again, the concept is, if this really scales, this can create a more equal economy within digital currencies, since everybody can claim every day GoodDollars, and therefore people can use it and they don't need to actually buy cryptocurrencies. They can actually receive them for free.
Mm-hmm. Well, it kind of seems too good to be true. Just claim free money every day. How exactly does it work? Where does the funding for GoodDollar come from that enables people to claim $1 every day?
Sure. So again, the inspiration was when Bitcoin just started back in 2010, 2011. There were a lot of Bitcoin faucets. So you can just claim Bitcoins for free back then. I used to give lectures in 2011 and 12. And for every person who actually came to the lecture, I gave one whole Bitcoin for free.
Wow.
Right? So when a currency starts before it has significant value, it's relatively easy to give it for free, right? And if you think about it, mining is giving away coins by definition, right? So the miners were actually giving away Bitcoin to facilitate usage of Bitcoin, right? So I don't know exactly who ran those faucets back then, but people understood that the more people use Bitcoin, the more Bitcoin gets known, the value of Bitcoin eventually will go up, right? Now, the GoodDollar, basically, mining is identity mining. So every person has one address, one unique identity. There's a sort of a liveliness test, the test that you have only one address within GoodDollar. And the fact that you log in every day and claim your GoodDollars is basically the process of mining those GoodDollars. Now, those GoodDollars come from a reserve that is basically staked in DAI. So people actually stake money into the reserve. Right now, we're actually doing this in eToro. So we staked $55,000 into the reserve, which then earns interest, and then that interest is being basically translated or minted into the GoodDollars that people can claim every day. Now, the value of GoodDollar will eventually be determined by how many people are using their GoodDollars. What are the goods and services that are bought and sold for GoodDollars? So again, if you think about it from a cryptocurrency point of view, we simply change the concept of mining. Instead of mining being something that is either being done by machines or just by people who actually hold GoodDollars, which is staking or proof of stake, then in this case it's sort of proof of liveness or proof of identity. So people actually come in and claim every day. Those are the people who are mining the GoodDollars, and the value is coming from people who are basically staking within the protocol.
Mm-hmm. And is eventually the goal to list GoodDollar for trade on eToro? I mean, if I'm claiming every single day, eventually there will be an outlet and an exchange where I could actually utilize it?
So we're really thinking about this as a research project into a new form of both digital currencies and economy. So now when everybody around COVID is talking about universal basic income and how can you ignite the economy or reignite the economy, really what we're doing is we're testing the thesis that if you build digital currency that anybody can claim it every day, people will start using it. That usage will create value. That usage and those daily claimers will eventually create a marketplace and goods and services bought and sold for GoodDollar. So our view here is really not coming from sort of the trade part, it's coming from the benefit to the community and how can we do something that potentially first creates educational sort of platform for people to actually use digital currencies without the need to risk their money. So they can just go to the app and claim GoodDollars. Second is potentially, once this creates value, improves financial inclusion. So people can actually, again, access the GoodDollar for free, claim GoodDollars and start using it. And obviously there's still more than 2 billion people unbanked around the world. So that's a key problem in the world. And again, the holy grail here is, can this really improve also eventually equality? So can basically a different type of economic framework where people can claim everyday GoodDollars and people who come from a philanthropic mindset stake cryptocurrencies in order to generate those GoodDollars, can that generate a fairer economy? Now, the same problem that exists today with the traditional economy, which is the rich get richer and the poor get poorer, is actually multiplied in the cryptocurrency economy, right? So if you look at the Gini index in Bitcoin or Ethereum, it's actually much, much worse than the worst countries out there. And that is partly because, and again, that's not necessarily a bad thing where we are today in the state of cryptocurrency, but there are a lot of opportunities to generate yield, to take risk and generate high returns in cryptocurrencies. I think that's one of the reasons a lot of people are in this ecosystem, is the high risk, high returns. But that also means that the people who have more tools, are more sophisticated, have the ability to sort of use the new technologies and take that technology risk as well, those are the people who are getting richer. And again, it's a good thing. It's a good way to start the economy. I think that's what we've seen in capitalism for the past 200 years. And I think that's a driving force of a good economy, is that people who can use their talent to generate yield and generate value and therefore generate profit for themselves. I think that's generally a good thing, but it has to come together with something else, which is how do the people who have make sure that they support the people who don't have. And I think that's a great quote I heard from Warren Buffett over dinner, is how do we make sure we don't leave people behind? And I think as the world progresses and technology progresses, we need to make sure that we also take care of the people who do get left behind and help them progress.
Mm-hmm. Well, you're referring to, I'm assuming, the luncheon with Warren Buffett and Justin Sun that Justin Sun won in the bid. How was that lunch? I'm sure, picking the brain of Warren Buffett, did he seem receptive and did he understand kind of how cryptocurrency, at least the economics of cryptocurrency, work?
I think he does, and that's because he gave an analogy. So I don't think we convinced him. I know we didn't convince him of buying Bitcoin at least yet. So he is skeptical. He does understand blockchain. So he spoke of blockchain. He spoke of the fact that a lot of the companies that he invested in are looking at the technology. He does have access to the smartest minds around the world. So people like Bill Gates are his friends. So they're among his book club. So I'm assuming they have a very interesting dialogue. And obviously, Bill Gates does understand very well blockchain technology, as well as people like Jamie Dimon, etc. So you can think that Warren Buffett has really the smartest people around the world around his table, and they understand the value of blockchain technology, which is different than cryptocurrency. I think when he referred to cryptocurrency, he gave his famous quote of why he doesn't invest in commodities as well. And he gives this example that if you take all the gold in the world, you fill in a football stadium. And if you would have taken all of that value, you could actually buy Apple, Microsoft, and Amazon together. Wow. But if what do you prefer to do? Buy Apple, Amazon, and Microsoft, or buy a football stadium filled with gold? And then what he says is 10 years later, if I bought these fantastic companies, they've generated value, they've sold products, they've generated income for hundreds of thousands of families. And if I bought that stadium filled with gold, it's just the same stadium filled with gold. It hasn't done anything. It hasn't generated any value. So that's his view around commodities. So first of all, the fact that he looks at Bitcoin as a commodity, I think is a positive thing. It means he understands sort of the narrative of digital gold. I think that his view around economics and investing in companies, I think that's a very valid point. I love cryptocurrencies, but still 60-70% of my portfolio is actually investing in stocks and in companies. Because even if we assume, Bitcoin prevails as digital gold, and eventually fiat currencies get replaced by cryptocurrencies, which I think is on the extreme because I think they will live side by side, then still what really generates value are entrepreneurs and executives who manage great companies who generate value for people. So does it make sense to invest in gold? Yes. Does it make sense to invest in cryptocurrencies? Yes. Does it make sense to also invest in companies who generate value? Yes. His view is, I don't invest in commodities, and that's a fair point of view. From the point of view of sort of fiat currencies and the dollar, I think he's a big believer in the dollar. Like he said over dinner, I think my grandson would prefer a suitcase with dollars versus bitcoins, and that he believes that the dollar is here to stay. I'm not sure it's something to doubt. I think the U.S. is here to stay, the dollar is here to stay, but I do think there's 3-4 billion people around the world who live in countries where those currencies are not necessarily here to stay, and they're going to get devalued, and we need to think about them as well. So again, I'm a big believer in the value of Bitcoin. Warren isn't, and I don't think we've been able to convince him otherwise.
I wonder if you were able to have the conversation with Warren Buffett about the good dollar now, because clearly, I see his point where, money just sitting there, even value in gold, isn't doing any work for you. And he's part of that club of billionaires who, have said that when they pass, they will donate the majority of their wealth to good causes. I wonder if you were able to explain to him the idea of good dollar, where you can take this value in a commodity and stake it and have that actually work and create more value to give to people in need. Would that be something he would be interested in potentially?
So we had a quick dialogue around it. I think, again, his view is a bit more on the conservative part, on how to generate sort of more equality. He does very much believe in the notion of giving, the biggest giver or one of the biggest givers on the planet. I think his view is more around sort of the tax benefits and the point system in the US. His view is also very US centric, which is fair. where the good dollar really approach is very global. I did end the dinner giving him actually a signed letter describing the good dollar and asking him, for his view at some point in time. I think our view in the good dollar is if we build it, they will come both from a user's perspective and eventually from philanthropy. We really want to ignite usage. We want to see claimers coming in. We want to also test the protocol to get more people, the community building and developing. It's really a notion of a different type of crypto, which is built for good, which is built for equality. And I think it's also a very long-term project. So I think it's going to take maybe a couple of years before we get people like Warren Buffett in.
Mm-hmm. And, if we're looking back at DeFi and kind of the way it manifests itself today with, with that speculation, that yield farming, which, like we said, it is necessary. Do you see, or do you feel, as you run a retail exchange, do you have any fear or see a future where this DEX, this decentralized exchange technology, gets to the point where centralized exchanges don't exist anymore?
I don't think so. Again, it's a matter of simplicity. Can you connect fiat directly, for example, into the blockchain without a centralized node? The answer is probably no. There's, some people might say yes, but it's a very complicated way to do it. But eventually, most people, do have fiat, do have a bank account, do have a credit card. They want sort of a simple way to enter the world. I think what we're really seeing in DeFi, and again, I'm running, a large fintech company, and we're dealing with a lot of complex financial instruments on the back end, and we work with the largest banks in the world, and we understand derivatives as well as settlement and clearing. I think DeFi gives those abilities that historically were really reserved to the really financial experts. So if you would try to do something like yield farming, just from the point of view of optimizing P2P lending, right? There's the whole world of P2P of lenders who lend to people, right? And there are algorithms who then basically define where is the best place to put the money in order to lend people, in order to minimize risk and maximize rewards. In the traditional world, you would actually invest probably in a hedge fund that creates those algorithms. They're proprietary, and then generates the income, and that then takes 2 and 20, right? Mm-hmm. But everything would be very centralized, and you wouldn't necessarily know how they're running those algorithms. And here, the process is relatively similar in the notion, right? So these are people lending money. There's interest rates. There's an algorithm optimizing those interest rates. It's just everything is in smart contract code, so everybody can actually read it. And the rewards of potentially the DeFi protocol developer, instead of being 2 and 20, and instead of building this system where it's a hedge fund and you have an administrator and people send money in and you need to take an auditor like EY, everything is on the blockchain and it's open for everybody. And the benefits for a creator potentially is either the token or some incentive that he takes out. Of course, this is also a regulated space, and this is an unregulated space. This is reserved for profit. So there are a lot of differences, but eventually, if you think about it, it's really about taking a lot of concepts that exist today in the world of investing and financial services, like hedge funds, and just translating them into code, implementing them, and enabling people to directly using those protocols.
Mm-hmm. Now, there definitely are positives that we do want to take from the traditional financial world and bring into the crypto sphere, but one of them we do not want to take in is, this latest leak from FinCEN documents, thousands of documents highlighting all sorts of criminal activity through the major traditional banks. It's kind of funny because this is something that us early crypto adopters and people who have been pro crypto have been saying for years that if you're really worried about illicit activity, money laundering types of things, it's not really happening in Bitcoin or crypto. It's happening in the traditional financial system. Do you think that big leaks like these that really get out there and get the public some sort of more interested and knowledgeable about how much dirty money actually goes through the traditional system, does this help crypto's cause? Does this help crypto's PR, let's say public image or something like that?
I'm not sure whether the fact that there's a lot of problematic activity within the traditional banking system necessarily helps the image of crypto from that point of view. I do think that a lot of smart people and a lot of great companies are working on creating better anti-money laundering tools, tracking systems on top of cryptocurrencies. Both companies like chain analysis, but many others. I think again, from the point of view of what system is easier to track, it's probably crypto, right? So again, the traditional, Bitcoin and Ethereum are relatively easy to track. It's a public ledger where all of the transactions are transparent. It's true that there are things like mixers, etc., but I would generally assume that large agencies, let's call them, have a very good notion of how to track illicit activity on top of the large protocols like Bitcoin and Ether, etc. So we need to understand it's just a different system. This is a public ledger based on blockchain technology, and the other system is really a system of gatekeepers, right? So the entire banking system, it's all around gatekeepers who are heavily regulated, who do not share information from one to another, right? You can't get access into the ledger of your bank and see the transactions of everyone on the bank, right? It's almost the opposite of how bank secrecy and how people used to think of banking back then. And gradually what happened is regulators, especially because of anti-money laundering regulation, started mapping and connecting all of the ledgers of all of the banks. So to the best of my understanding, the Federal Reserve does have a ledger of all of the banks in the US, right? So there is actually a private ledger where the Federal Reserve does have access to all of the dollar transactions within the US system, but it's still private, it's not public. But so the difference is, do you rely on all of these gatekeepers, or do you put it out in the open and develop technology to monitor it? So I think, again, in general, I think it's a fair assumption that the ability to trace and create controls for anti-money laundering on top of the large crypto protocols will significantly improve and eventually potentially will be better than the traditional banking system.
Mm-hmm. Yeah, I completely agree. I mean, I have spoken to Kim Grauer, head of research at Chain Analysis, just for this conference specifically, and every time we speak, she does reiterate this point where the people who are most happy when criminals use crypto is the government agencies, because it gives them an easy way to track it. I mean, there is an open public ledger that they can see, that they can track, they can trace, and so it kind of makes you rethink government's view on crypto, where once it was kind of, crypto was in many ways, if you were anarchist, if you were anti-government, libertarian, you wanted to get out from the government's thumb, it seemed like you would then turn to crypto. But I could easily foresee a future where the government adopts a lot of this technology because it has been proven to really help them trace the transfer of money, which at the end of the day is essentially what gives them their power. I mean, especially the U.S. government, it acts like the world's bank essentially on a global scale. Do you think that this will lead to, sooner rather than later, central banks releasing CBDCs?
First of all, the answer is 100% yes. We are going to see CBDCs. It's just a matter of time. So I think, again, it's the same process that we've seen in the internet asking, are we going to see the newspapers online? Then the answer, back into 1999 was yes, they're all going to publish all of the articles online. And obviously, it's going to be eventually online first, right? There was some resistance at first, but digital currencies is an inevitable future. Moving from cash to CBDCs, I think, is an inevitable future as well. And I think most central banks understand that. It does create some challenges really about anonymous transactions, right? So what is private and what is public in CBDCs? And if there is no cash eventually, how do people use money when they want to use it privately and when they don't want it traced, right? And that's not necessarily a bad thing.
Cool. All right, I lost you. We could pick it up from the CBDCs. What was the last thing? Probably that got cut off. Yeah, we can start.
I was talking about CBDCs and different nations using cryptocurrencies and tracking in different ways, and then we suddenly got cut off mysteriously.
Yes.
I was about to say that I think most large governments already use cryptocurrencies probably and have very good tracing abilities. So maybe we need to keep to the next subject before we get interrupted mysteriously.
You're probably right. Now, I'm gonna ask you, as someone who does run an exchange, both that also supplies traditional, stocks and other options and derivatives to its clients. For so long, we've been talking about a Bitcoin ETF, as something that it's an exchange traded fund, and what it does is that offers a kind of a regulated and insured vehicle for institutional investors to access or to get exposure to Bitcoin without having to hold the underlying asset. And it was just announced that Brazil's Hashdex is teaming up with NASDAQ to offer that in the Bermuda Stock Exchange. With all the various, let's say, advances that we've made on crypto regulation in America and around the world, and as institutions have seen how Bitcoin and crypto as a whole has kind of weathered the economic storms throughout the time. One, is Bitcoin ETF still that important? And two, is this Bitcoin ETF that's being listed on the Bermuda Stock Exchange, is that a significant first step?
So again, I was always thinking that a Bitcoin ETF isn't that significant, just because if large financial institutions have already been dealing with crypto. There are already companies doing insurance. I understand very well how financial institutions invest their funds. They know very well to invest both in public markets as well as in private markets. They invest in real estate. So any large fund, whether it's a BlackRock or a Fidelity or a eToro or Wellington, they know how to invest in private companies. They know how to invest in real estate. They know how to, and a lot of them have also learned how to invest in cryptocurrencies. Fidelity obviously being sort of the top of the line. So if you can invest with, a regulated platform like eToro, whether you're financial institutions or with Fidelity, then does it really matter to the ecosystem whether there's an ETF for financial institutions? I don't think so. Does it matter for retail individuals? is it going to be significantly easier to have an eToro or a Coinbase account to buy Bitcoin directly, or to have a Schwab account and buy a Bitcoin ETF that has an ETF provider created a wrapper that probably has some cost and that's trading on a traditional exchange, where eventually they will need to go and buy it eToro or Coinbase or Fidelity. Then why do retail investors need to go through that entire loop? And does it actually provide value to the crypto ecosystem where individuals go through that loop? I don't think so. But does it mean that we won't see, if there is going to be an ETF, some traction to it? I think we are probably going to see several $1 billion flowing eventually to Bitcoin ETFs, the same that they're flowing right now into ETNs, right? Into the various existing sort of wrappers that have Bitcoin or ETH in them. So I don't think it's a big game changer. I think it's really about SEC's decision currently to protect potentially consumers by not approving it. But I don't think it's that important for the ecosystem as well.
But on the other end, big news that Kraken was actually, given a bank charter in Wisconsin, as running an exchange, I'm sure you know firsthand what it is to have to deal with regulators and the ramifications of this. How big of a deal is this that a kind of a traditional crypto exchange has now gotten a bank charter, and does that open the doors? What does that do for both the exchange side as well as the consumer side?
So first of all, obviously, congrats are in place for the Kraken team. I don't think, we've been regulated, eToro, in the UK, Europe, Australia, the US, for a while now. So we've always operated as a regulated, basically broker dealer, and we always treated cryptocurrencies as financial instruments, much before they were defined, and they're still really not defined properly as financial instruments in all of the global regulators. So I think we are definitely going to see more regulation in crypto. I think existing regulators, in some cases, it's going to be the bank regulators. In some places, it's going to be the securities regulators. In some places, it's going to be the commodities regulators. There are various different regulators in there, the money transmission regulators, which is the FinCEN part. So I think we are going to see more regulators who are all going to have to accept that the regulated entities under their regulation deal with cryptocurrencies. And I think that's a very good thing. And a company like Kraken getting a bank charter potentially means that more banks, and that relates to something additional that we've seen from the OCC, that more banks will be able to provide cryptocurrency services to their consumers. So in general, I think it's good to see the large crypto companies get more regulated. And I think it's always good to see regulated companies in the space of cryptocurrencies. And I think that lives alongside the sort of less, more uncertain, but also sort of faster waters of DeFi and sort of the pure smart contracts play that we see happening day to day.
Well, I mean, kind of speaking upon that connection, the regulators, some might say, got to ICOs kind of too late. There was the ICO boom. There was a lot of good projects, a lot of scam projects, and then kind of the regulators came to kind of pick up the pieces and throw out some fines. But with DeFi, as DeFi is gaining more momentum and more capital's going into them, will the regulators' eyes turn to DeFi, and do you think that they will start to regulate these protocols and instruments? I mean, essentially, they can't do much about the protocols, the automated DeFi products themselves, but they could deal with the on-ramps and the off-ramps?
Again, on-ramps and off-ramps are already regulated and going to be heavily regulated, but we're talking about on-ramps and off-ramps of fiat. There's a very good question on how can you regulate smart contracts, right? Who do you regulate and what type of regulation is it? Because it's about writing code. When there is an incentive to that code, right, and there's a known beneficiary to that incentive, potentially you can regulate that known beneficiary around those smart contracts. But it's important to understand that regulation, I used to explain that a lot of times to our team at eToro. So I would say, we're in the brokerage business, right? People buying and selling stocks, the same as people buying and selling cryptocurrencies, but the rules have been written before and assuming neutral technology, right? So when you think about brokerage, for example, I would tell people, remember, the rules are somebody wants to buy a stock, they phone you, you pick up the phone and you ask them, how much of the stock do you want? They tell you, you hang up the phone, then you go somehow to buy that stock. It used to be you'd go to the pit, you'd go to the actual exchange with a note, and then you'd go back and you'd send a bill to that customer telling him, I bought you these shares, please send the money and I'll send you the shares, right? So that's traditional brokerage. And most of the rules have stayed the same, right? So, but today, somebody downloads an app, funds an account, makes a transaction. Everything is automated. So some regulators have been changing the rules, have been updating the rules, but in general, rules are relatively technology agnostic. In crypto, when you think about smart contracts, it's almost impossible to be technology agnostic, right? Because the actual financial transactions, the actual logic is in the code. So it's going to be very interesting to see how it gets regulated without, getting killed. Because again, I do think this is a very, very valuable technology advancement in finance, being able to make the financial logic, derivatives, complex instruments, tri-party or multi-party agreements, automatic clearing and settlement. Again, all of these are things that are really futuristic if you understand how finance works today. So I think regulators understand that, but there's a very big challenge on how do you regulate it without killing it.
I mean, and that's kind of the point where right now DeFi, a lot of what we're seeing are these complex, tools that are used by the people. Admittedly, there's a high barrier to entry, so the people who are using it for the most part do understand the risks and do know. But that's still that's a decentralized finance for a very specific part of the traditional finance system, or that they've kind of figured out a way of utilizing here, using smart contracts. But when are we going to see that DeFi, the decentralized finance, that kind of future that I always envisioned, where it's, let's say I, as a regular person, I have a business idea and I want a loan for my business. So instead of going to the bank and pitching and begging and trying to convince them of my good idea to raise money, where's that DeFi where it's essentially decentralized finance, where I could go to the masses, I could go to the world, to the community with my business idea to get a loan, where I like that. When are we going to truly replace the banks, not on the speculative aspect that the banks, like the Goldman Sachs and Morgan Stanley?
That's finance, right? Finance is financing your needs in order to accomplish something. That's the definition of finance. I think it's going to take a while. I think we're right now, the entire ecosystem is in research and experimental mode. I think we're doing empiric research, which is great. So I'm definitely from the school of thought thinking people sort of experimenting, launching smart contracts, people who understand the risks, willing to risk money on those experiments. I think that that's all great. You're asking when is that going to be mature? It is like asking in 1997, when can I trust reading things about the internet, right? And the truth is, I think we reached that peak probably 3-4 years ago, where you could actually say, okay, I read it on Wikipedia, so it's true. And from then actually that started deteriorating. So I'm not sure whether, there's a clear answer to that, but I think we're looking at a 5 to 10 year horizon.
All right, and last question before I let you go, because I do know you're busy. eToro just renewed its partnership with the Premier League team Leicester City, along with 11 other deals with English football and German football. This is where the eyeballs are for your prospective customers, so a great branding and marketing opportunity. But are you also just a big football fan? And if so, which team?
My entire time goes into my passion of capital markets. So instead of watching footballs, I watch the markets. I do have a lot of people who are very passionate about football as well. But personally, I'm more passionate about the market. So trying to bring the markets into football rather than the opposite.
So then let me ask you: Are you team Uni, team Sushi, or team Yam?
I'm team eToro.
eToro. All right, Yoni Assia, thank you so much for joining us and always giving wonderful insights into the industry, both on a micro and a macro level. I hope you enjoy your vacation. And for all of our viewers here at REIMAGINE 2020, I'm Yonah Hochhauser. Thanks for watching.